Hi, this is Dave with Market Trading Concepts. It is Saturday, March the 31st. I'm doing this video to close out the week and the month of Friday, March the 30th. So I'm going to start with the Dow Future. So the Dow Future, last week we were saying that we had some touches of the 21 period moving average here, and that we were more interested in getting above this level here, this candlestick here for a long, which came in at about 13,089. So we had that this week on this bar. You can see it just powered through there, and you can see the intensity. You can see the intensity that it powered through for a long. But then what it did is it came up here, and the next day it just probed above this this price resistance level here, and then it sold off and it pulled back. Now when that happened, I was actually looking at this breakout point here, this level here, 13,089, to hold support and then to push off. So what's happened is we came down to another level that I was looking at, another support level. Aside from the 21 period moving average, we came down all the way to, and I'm just going to zoom in here, we came in all the way down to this support level right here where we touched it, and then we pushed off of it, and that came in at 12,970. And then you can see now we are back above that level, and we closed Friday pretty strong, close to the top of its range at about 13,146. So we really need to get back above these swing highs. So if you look at this from a pattern perspective, what you can see is you can see this higher high, right? You've got this higher high, you've got this higher low, and then we've come back up here, and technically we put in a higher high, and technically we've put in a higher low. Now, so if you look at this from a trending perspective, like the trend is still intact, but where I think it's a little bit cautionary is you can see within this range here, within this range, we're kind of developing a range, and you can see that we've tested the 21 period moving average once, twice, three, four times in the last like 6 bars, let's say. So that's not the kind of action you want to see for a strong trend. So what I'd be looking for now, is a push above this level to put in a new swing high, a new. Let me just see here. Just bear with me. I think I moved something here. Okay, I'd be looking to put in a new higher high or a new swing high. Okay, swing high. So I'm looking really for a break above this level to continue on the bullish side. Otherwise, what I'm looking at is a break below, these levels here in the 21 period moving average. So this is really the range between 12,933 and somewhere around 13,200 and something. Let me just pause the video and throw a line up there. Okay, we just quickly paused the video there, and so what we have is we have this level at 13,242 and 12,933. So you have you have a pretty healthy range of a few hundred points there, but really unless you really get above this for longs or get below this this level here for shorts, right? What you're really looking at is just a range, and within that range you can have volatility within that range, but it's just I don't know. I think now we really need to look at this kind of, when you see these swing highs and swing lows, usually you can see the distance in between them. You see this here, you've got some kind of distance between the stair stepping. Well, right now what you have is you don't really have a lot of distance between them, and that to me is a little bit cautionary, because it kind of, and you can tell this if you're watching the markets intraday, it kind of seems like a tug of war. There seems to be like a tug of war between the longs and the shorts going on, and I think that this range is really what tells it all. And I think that we really, if we're going to continue on long, we really need to get above this level here, okay? And from a swing trading perspective, I think my best position or my best bias would be flat. Until we get some action one way or the other, because you really don't want to get chopped up within this range where you get, you get a day where you've got, okay, great, you're up, and then all of a sudden you're down, and then you're up, and then you're down. You really need a clear break of that level and a resumption of a decent trend with a decent, angle of attack here, instead of, you don't want to see these moving averages start to flatten out, and then you're just going to get, a situation where it just does this. Okay, so I think erring on the side of caution right now is probably the best thing to do until you see some real action out of that level, or out of that range rather. Okay, and let's just have a look at this from the Darwin Squeeze perspective, and looking at multi-time frame analysis. So looking at the weekly chart. We still have this potential target here of about 14,000 on the Dow Future, and you can see here on the weekly chart, you're starting to develop kind of a range. You're still above the 8 exponential moving average, and you're still above resistance on the weekly chart, or support rather. You're still above support on the weekly chart, but you've got this kind of price resistance here that we identified when we zoomed in on the daily chart. And everything is still intact on the long side. This squeeze fired off back here, so you've got this Darwin squeeze in play. But this is, it's been going for quite a while. Not that necessarily means that it's going to end, but everything is still basically bullish on the weekly chart. Now, looking at the daily chart, you had this target of about 13,297. And we didn't quite hit it, but we printed more than 75% the width of this box here. So I think that target has basically been met. And you can see now you have the resistance coming into play, and everything still looks intact to the long side, except for this. Here you've got a little bit of divergence here on the MACD, and the other place where you have divergence is on the angle of the MACD. If you look at this, this is making higher highs, right? And this is now making lower highs on the MACD. And you can also see divergence here where this trending histogram is making here's a higher high. Now it's making a higher low, I guess. So you've got really a divergence here between price action and what your indicators are telling you. So that to me is a little bit of a red flag, and like I said, what I'd really be looking for is this range here. I'm actually waiting for another Darwin box, for the indicator to print another Darwin box so that we get a cleaner picture of the actual range. And then we can see if, maybe a Darwin squeeze is going to start to set up where these dots turn red again, letting us know that we're going to get some fresh movement or some fresh volatility into the market. So from that perspective, everything still looks intact, but just be careful of a potential choppy range here where you're just going to get chopped back and forth. The best thing to do is if you like to day trade, then I think it would make sense to look for good intraday trends. Until we bust out of that range, either up or down. Okay, and actually if we bust down through this range, I wouldn't really look for targets beyond this level here. Okay, the bottom of this Darwin box here, which is about 12,651. Because it is counter trend. But it may be, if it does happen at some point in the future, it may be good for a move down here, but I think you're going to find some immediate support down here or slightly before it. So that would be, kind of a counter trend trade. Okay, and let's take a look at the sister indexes again this week. Let's look at the S&P future, the ES, and let's see what we have here. So I think You have a similar situation. This target was definitely met on a 1-to-1 ratio here. This Darwin Squeeze here, were printed along. The target was 1411, and we actually, we busted through it, and then we pulled back to support. So these higher highs and higher lows are a little bit more prominent than on the Dow Future. We closed above the definitely above the 21 exponential moving average, and we closed above the 8 exponential moving average on the daily. Okay, on the daily chart. Looking at the weekly chart, what you have here is you still have this target of potentially of about 1500 in the S&P, and you're still above the 8 exponential moving average on the weekly chart, the 8 EMA. So it's kind of hard to write with a mouse. But then what you have here is you have a lot of doji action going on here. You've got like 2 weekly dojis here. I mean, if you look at this from the weekly chart, you can see this higher high, higher low. We haven't really put in a significant higher low in a while on the weekly chart. So it wouldn't be unusual here to have some kind of a flush down to this level at some point. And I mean, if we do, don't get too excited on the short side, because you do have weekly support coming up on all the charts, and at their 21 exponential moving averages on the weekly charts. But it wouldn't, you could get some good short-term short action. But I mean, I think you really need to look for guidance on the daily chart and see like if you're going to break one of these levels either way on all of the indexes. So that's really still in play. I mean, these chart patterns to me look the same. The ES looks the same as the Dow. Now taking a look at the Nasdaq. The Nasdaq, because I've been kind of intraday trading the Nasdaq with varying success, and my day trading this week has been, I was positive and then I was negative, and I'm basically back down to break even. So a little bit of interesting action day trading these markets. But I guess because we're in an uptrend, I'm always looking at the long side. Even though there are some good short-term intraday day trades to be taken, but I'm always looking for it to roll back up to the high side. And one of the things that I noticed on the Nasdaq is that intraday, it's a little bit harder to tell from these charts, although it's not from the daily really, but intraday the Nasdaq has been a little bit weaker. And one of the things that I noticed here is on the weekly chart, we closed, probably a little bit more than 50% off the highs. So this is a potential sign of a bigger pullback to come. Now that pullback could come down to the 8 exponential moving average, the 21 exponential moving average. We don't really know. Like, I mean, when I look at this from a pattern perspective, we've had this move, and usually you would see like, you'd see a stair step somewhere in here. You'd see a pullback and then a resumption. So just be cautious. Be cautious on the long side, looking for breakout continuation. This target, this is pretty close to this target here. So we printed a high of, let me just draw a line on here. On the Nasdaq, we printed a high of, now if you can hear some dogs snoring in the background, I apologize. My dog Napoleon there is just taking a little nap. He's in the office with me today. So we have a high of 27, let me just make this a little bit bigger. Okay, so we have a high of 2785. So we are roughly, 100 points away from this major target. And I think like if I was looking at this from a swing trading basis where I bought this breakout, let's say here, or pretty close to it, I'd basically say this target was met. It's not an exact science. It's not an exact level. This is more, this is potentially where it could go. So from that perspective, I'm looking at the daily chart, and I don't think it would be unusual. To get a pullback to the 21 exponential moving average, which is about 27.04. I think that might be worth a shot, where if it hits that level, then you could look for some intraday strength to roll back up to the high side before taking a long. It might do one of these and then wait for it to kind of come back up for a long entry. Or if it doesn't, then I think what you would be looking for is the 2646 level, which is the 8 on the weekly chart, and ultimately the 2506 level. So these are that would be a pretty healthy pullback, if you were to actually get this. The other thing you could do is look for a break above this bar here. If we get a clean break above this bar here for a continuation long, okay, with an ultimate target of 2888. So I think you need to look at this as almost as playing both sides of the market, where you could look for the breakout momentum opportunity, or you could look for the reversion to the mean pullback opportunity. So there's two ways to kind of look at this. And it's not a bad idea to look at a lot of markets, or look at markets all the time like that, where it's like, okay, if we're going to break above this level, it looks like we might hit this target. If we're going to come back down, then we're going to look for support. So the market goes through different phases, and breakout momentum, reversion to the mean, high volatility, low volatility. So it's important just to kind of keep an eye on these levels and see what is the price action telling you in terms of what kind of chart patterns might it put in, and what type of are we pulling back against the trend, or are we resuming with the trend, etc. So I hope that makes sense. Any questions, just let me know. Okay, let's have a look at the transports to see if the transports are confirming. So when I look at the transports on the weekly chart, basically what it's telling me is, we do have some kind of price resistance in and around this level, okay, which coincides with this price congestion in the background, and then it also kind of coincides with these Darvas box highs. And then what you also have here potentially is, from a pattern perspective, it looks like a potential double top. But where we're at now is we're holding trend line support. We're holding support at the 8 and 21 exponential moving average, and we have a doji on the week. So I think what I'd really like to see happen here, the easiest trade that would make the most sense would be obviously a resumption of the trend. So I'd like to see some strength come into the transports, and I would like to see a break above this level here. Okay, I'd like to see a break above these highs here to tell me that maybe the indexes are going to continue higher in the direction of the trend. Okay, and that would make the most sense. Now, if we look at the daily chart. If we look at the daily chart, what you can see here is you really have a situation where you've got some red Hakanashis, okay, and so you've got some red Hakanashis. You've got sort of this, this double top kind of pattern happening here, and you're really kind of in no man's land here on the daily chart. You're still kind of bullish here, but you're losing momentum. This is not quite crossed over. You're losing momentum here on the squeeze momentum. So the daily chart really doesn't say much, but I think what you would really need to see is a break above these highs, and look for some kind of continuation here in the transports as well. Okay, so let's continue our conversation from last week on the notes in the bonds. Now, the notes in the bonds, if we look at the 5-year here, it's got a squeeze potential breakout, okay, on the weekly chart. Okay, the radar screen is giving us a heads up here. And if you look at this, what happened was you had this sell-off and break below the 21 exponential moving average, and now we've come back up and we've just probed above it. We've just retested it. Okay, you don't have an 821 crossover yet. okay, where the 8 rolls below the 21 period moving average. So that's a little bit of a cautionary sign. And you can see we put in, we had this accumulation week last week. That would be, this was closing this week. This would be, the previous week. So you had some initial, if we just jump over to the daily, you can see it more clearly. We had this sell signal kick in here, right? We had this Darwin Squeeze kick in. The target was more than met. Almost double the target was met. And we were saying, look, you should look for a bounce from this level and then maybe look to reestablish around the 21 exponential moving average with a stop of a closing above this level, right? So what did we get? We had a close right at that level on this day, which would have been Thursday. And then we probed above it. You can see we probed right above it. And then we came back down and we closed right at that level. So these are the most kind of irritating, sort of confusing, conflicting trades to take, because it's like, okay, we've established a level here. It's probed above it. We said, if we get a closing stop above here, if we get a stop above here, it could probe above it, but you really want to see a decisive close above here to say, okay, this trade's not going to work out. So this is like line in the sand, and the market loves to do this. It loves to just kind of push the limits. It loves to push stops. It loves to push traders, and it looks at, it's looking at this level, and you can see that is a key level, and that's a level that we kind of identified here. So I'm going to draw a line on our chart just so that we remember that level. And this is how I develop a lot of these levels, is just through observation, where you're looking at that and you're looking at, the highs. Oh, it's a little bit higher. I'm going to go to the top of the tail, and that coincides with the closing of that bar. So you can see, like, we closed right in and about that level. We probed above it, and then we closed down actually below it. So you can actually see that it is holding, it's holding that level, okay? It's holding that level as resistance at the just over the 122 level. But now what you can see is the 8-period moving average is coming up and kind of giving it a little bit of support, and so is the 21. So really what you would want to see, the safer trade here, if you, let's say, haven't taken a position or anything, the safer trade here would be, okay, we hit resistance here. Let's see if this resistance is going to hold, right? And let's see if we can get some intraday weakness in our favor. If we're looking for a short, we want this to roll back down, and we want to see a situation like this with a potential testing of these lows. Okay, so that would really be the trade. So looking at it from that perspective, I think what you would want to see is, you'd want to use probably some multi-time frame analysis and look for short signals on the 60-minute chart, which you actually kind of had here. You actually just had a Darwin Squeeze short here. But I think what you'd really want to do is you'd want to get a close below the low of this high bar. So here's the high bar here. You'd want to get a close below this level here. And then once you get a close below that level there, you'd be looking to take maybe a short around this level. Now, we're not providing advice. This is really just an example of the kind of trades that we look for in terms of, the chart patterns, etc. So this would be something that I would look for in terms of a chart pattern and say, okay, here I hit my resistance. Now if I can roll back below this level, that would be the safe entry with a stop, above that high. And in looking for a test of that, is my risk reward more than 1-to-1? Is my risk reward more than 1-to-1? Is it, let's say 1-to-2, 1-to-3, even better? And then I'd be looking at that and saying, okay, this is an acceptable risk reward. This is a decent chart setup, and maybe it makes sense. So this looks really interesting for the 5-year, and what you can see here is, now you've got kind of resistance here because you had enough kind of closes below this level that this is now resistance. So you'd want to see some kind of rolling action here, some kind of rolling action there, and you'd want to see these levels come into play. I hope that makes sense. Now you have to recognize though that when you do this, the other thing you could do is wait for these Hakanashis. You see how they were red and then they went to blue. you'd want to see them maybe roll back over to red. Okay, this is still negative. This is a red flag. You'd want to see that roll back over. This is negative, but it's losing momentum. But it could, could always do this and roll back down. But really, where you have the resistance is that your weekly chart is still net bullish. Now it's going to take some time for that weekly chart to roll over, but the weekly chart is still net bullish. So this is working against you. But in terms of this is a pretty good confirmation signal that this wanted to go lower. And if you look at this from a number of different perspectives, like from this chart pattern perspective, and let's even look at it from another perspective, where you're trying to find some other traders that might be looking at this. Let me expand this chart, and this is something that I don't really talk about a lot, but let's look at some Fibonacci's. So if we look at I don't even use them that much anymore, but you can look at this from a price retracement level where you've got this high, that low, right? Now you've come up here and you've basically retraced, right? You've retraced 61.8% of the move, and you can see you probed above it, but you didn't close above it. So, and people that adhere to Fibonacci analysis, things of that nature, they usually look for a 50% retracement to get short with a stop above the 61.8. So if you look at this, you can look at this as that zone has come into play, and you can say, okay, we probed above it, but we didn't close above it. So if we get a close above the 61.8% level, which, really closely, and this is what I'm looking at confluence, because I know that Fibonacci enthusiasts, for lack of a better word, people that use Fibonacci analysis, and there's nothing wrong with it. It's a great tool, and I do use it sometimes. So if you look at that, you can say, well, these levels are coming together with my levels. So I know that there's a lot of people that look at Fibonacci analysis, and I know there's a lot of people who look at moving averages. So when you see levels like this come together between different disciplines, different kinds of technical analysis approaches, then you can see that this is probably a pretty key level. Okay, this is probably a pretty key level. So if we get a close above this level here, if we roll back below this level here, you're probably going to look for some continuation. So I hope that helps. If you have any questions, again, send me an email, give me a call. Be happy to talk about it in more detail. Okay, I've just readjusted the size of my screen. I think I moved the sizing functionality, and I think it kind of cut off the names of the charts. So I don't think it's a big deal, but I just readjusted it there. Now, so let's move on and take a look at the 10-year. Now, if you look at the 10-year here on my radar screen, what it's telling me is we had a Darwin Squeeze on the weekly on the short. I'm sorry. On the weekly chart, we had a Darwin short, okay, signal. So you can see that this short came in and around this level here, right? And then you can see the target was met exactly on a one-to-one basis. So I'd be looking, for support to come in around that level, you take your profits there, and we move the full width of this box out of this consolidation period. So that target was met. Now it was against this trend. But you can see, this happened really quickly. I think we discussed this the other week in one of the other videos. This happened really quickly. You might not have caught it, but you can see on the daily chart the same situation. So I'm not going to draw this out. This is the same kind of situation where you had kind of a double top here, sloppy double top. You can see this peak was a little bit lower than this peak, okay? And then you had a Darwin Squeeze short signal come in here. You hit the target, you slipped through the target, found support, and you rolled right back up to the 21 exponential moving average. You had one close above it, and now you're closing below the 21. So if you look at it from this is basically the same story. This is the same story as the 5-year. Okay, so the 10-year on the daily chart, you've got this level here, which is key, around 130-ish, and you've got, this coincides with the bottom of this Darwin box. The breakdown point okay, where you had your short signal. And then now what you'd be looking at is really a close below this level and look for it to roll back down and at least test those lows again. And potentially test those lows and then roll even lower. Okay, so that is basically the same. It's basically the same play as the 5-year, same explanation. All the levels are, you could see the levels are kind of coming together in the same fashion. You've got this 21 exponential coming in on the weekly chart as resistance, and all of these factors are coming in on the daily chart, and you're looking for this pattern to resume down. Okay, so you've already put in you've got a higher high here, right? You put in a higher low on the daily, and now you put in a higher high potentially. So this is really the level to watch. I'm sorry, a higher low, okay, higher low. So now this is the level to watch, and you're looking for failure at this level and a continuation lower. So looking at that from, we can look at that also from a Fibonacci perspective, and it's probably in and around the same analysis as the 5-year was. So let's look at the price retracement lines. This high, this low, pretty close. You can see that 61.8% retracement level comes in right there. You see these levels? These are key levels. So I think that I think this is all in play. You don't want to see it close above. Normally, if you see it close above the 61.8, that is a trend changer. And so what you're looking at here is now it's broken back below the 50% retracement from that high to that low, and you want to see some kind of continuation lower. You can zoom in, drill down to a lower time frame chart like a 60-minute chart, 30-minute chart, 15. Five's a little bit. It reacts too quickly, but anywhere from a 15 to, let's say, 60-minute chart, and look for that continuation lower, which you kind of had here, but look for continuation lower signals. Look for it to put in lower highs, okay, and lower lows, okay. So look for that, and look for continuation lower, and see if that kind of plays out. Again, this is not a specific trade recommendation, but it is a for educational purposes, something that you could look at and see if this kind of setup works for you. Alrighty then, let's take a look at the daily chart and the 30-year. Let's round it out with the 30-year. And you can see it's kind of the same situation. I'm not going to repeat everything, but on the weekly chart, you've got this resistance. It's almost, the 8's almost rolling below the 21. You've got, let's see here. So you have, this target wasn't fully met here on the daily chart, right? So on the daily chart, you had the short signal here, and this target wasn't completely met, but at least 75% of it was. You're coming back up. You've got the same situation going on here, where the breakout point was, you've come back and retested it, almost retested the Darwin box, and you're finding resistance there. And now you've actually, this is kind of a little bit more telling, but you'd want to see a continuation lower. It's the same exact situation. You want to see these go red. You know what I mean? You'd want to see some continuation. This isn't looking good yet, but you'd want to see that roll back over. You'd want to see this, momentum picking up to the downside. You're still against the weekly trend. Same story, okay? Same story, so I won't repeat everything, but you could see all the levels are kind of coming into play around the same areas, okay? Okay, let's do something a little bit different this week and look at a few stocks. I want to look at Google. So Google here is on the weekly chart. It looks like it's kind of struggling to find, to put in a new high. So here was a high that was put in at this level here on the weekly. You came back down, now you're back up. But you can see that this, I guess some people call them a hammer. I'm not really big into candlestick patterns, but there are a couple of candlestick patterns I look at. I don't adhere to the, the traditional, it's a dark cloud, it's a spinning top, all the different names. I don't really adhere to that. But there are a couple of key things that I do look at, which kind of give you a heads up of, what the buyers and sellers are doing. For example, you can see that this candle here, you can see how it kind of probed up and then it closed close to its lows, and then you can see how it pulled back. So that was a sign of weakness. That was a sign of weakness and a sign of selling at the top. It couldn't kind of hold those highs, and it came off, and people were probably taking profits in there. And you can see on this weekly chart, on this weekly bar of the close of this week in Google, the same thing happened. So I would not be surprised if we don't put in a new higher high. If we actually, this might become a lower high or a higher low, whatever, a lower high, sorry. This might become a higher, this might become a higher low. I did it again. Okay, this might become a lower high, okay? So if you look at this situation here, if we get a pullback from this level here, which this is sort of indicating, now you might potentially put in a lower high, right? And you might be looking for a pullback to at least this level here at about 609. So that is potentially in the cards. Now, if I look at this from the daily chart perspective of Google, what you can see here is you've got some good price support coming in around this level at these sort of swing highs, right? So this price congestion level here, this breakout of the Darvas box level here, is probably some good support in and around 625, right? And if you look at this, you've got support here in the form of the 21 exponential moving average at 632. So here's a zone that you can look at for potential support, unless the market rolls over and the market's ready to say, okay, you know what, guys, we put in the high and we're just going to move lower, which could happen at any time. I mean, we've seen it with flash crashes. We've seen it with, market tops in 2007, 2008. Crazy things can happen, but when you look at this from a chart perspective, you've got a strong trend in place here. You haven't touched the 21 exponential period moving average in a long time, and you would expect at least a bounce off of this level or a bounce off of this level, at least, somewhere back into this area here, even if it is going to roll over and die. So, barring any extreme circumstances, I think if you get a healthy pullback into these levels, you could look at, okay, where are we going to find support in there? Are we going to roll higher, at least for a bounce here? I'd be cautious for a bounce much higher than that, just because of what I'm seeing on the weekly chart here, where this is, it's a potential lower high. So you're not, you've got some baggage in the background in the form of price resistance, okay? So from that perspective, if I was going to look for a pullback here, even though we have a nice trend in place, I would keep my targets pretty modest, and I would keep my stops fairly tight, looking for at least 1-to-1 risk to reward ratio on my trade, looking to make $1 for every dollar I risk. So that looks pretty interesting in Google, actually. And now let's have a look at another, technology giant, technology leader of our lifetime, at least at this point in time. Let's look at Apple. Now, Apple has been really strong, really strong. You can see we did a video a few weeks ago where we did talk about Apple, but look at this, look at this angle of attack here. That is just, that is a trend. Now you can see here we had a Darvin Squeeze on the weekly that came in at $426. We're now, closing just below 600. 600 seems to be a round number resistance, psychological resistance level, where, even though we came as high as it looks like $620, that 600 level, you can see a lot of activity around that level. So, I'm sure that there's probably people up here buying the top, pushing it higher, and then people saying, no, I don't think so. I think this is a good area to short it. So 600 is a pretty key level. Is what I'm really trying to say. You can see this target on the weekly was met at 490. That's a really good move there. That's like $60, 63 to $64, $65. that's a pretty healthy move in and of itself. And you can see it even went above that level, and it hit more than twice its target. That's the kind of stock you want to be in on the right side of. So, but then now what you can see is, at least in my opinion, you've got a doji on the week here. You had, where you thrust up to these highs and then you close close to the lows. This to me looks like it looks like a potential top. This looks like topping action to me. Okay. And now I would never want to short against a trend, especially a trend this strong, right? I'd never want to short against a trend this strong. I'm not a believer in catching tops and bottoms. I'm a believer in, buying the pullback in the direction of the trend. I think it's a more consistent approach. So even though this looks toppy, I wouldn't short it. But what I would be looking at is maybe some pullback levels and looking for bounces off those levels. Now, the levels that seem important or that come into play here are 549.99, so 550, 485.67 at this point in time. But, that would be a pretty healthy pullback all the way back down to here, 50% off of its highs. That's not going to happen overnight. At least I don't think so. So then you've got this breakout level here of around 550, which coincides with this level. So this is an interesting level. You can see the confluence between these two chart time frames. So you've got 550 here, the 8 exponential moving average on the weekly, and this Darvas box high, this price swing high, this breakout point. So you've got price support in and around that area as well. That looks really interesting. This 580 level, because we haven't touched the 21 exponential moving average in a while, this 580 level looks interesting as well. So that's, a decent pullback away, 10 points or so. If my math is correct, I can't count in my head. $20 away, almost $20 away. So I would expect a potential if it comes down to here. If I was going to buy this, see, you've got some sell signals coming in here, but it's against the trend. Okay, the trend is still really strong. So a pullback to let's say 580, 581, I would want to see it hit that level pretty hard, and then look for a 60-minute chart or something like that to start rolling up or putting in a lower high and a higher low. Okay, this kind of action where, let's say, it bottoms here and then you see it put in this here, higher low, and then it breaks above the crest of this swing high, and then maybe look for an entry there on a 60-minute or something like that, and look for some kind of continuation back up to, let's say, to retest some of these levels. Now, I don't know. So what I'm saying is I'm not looking for like a runner. I'd just be looking for a bounce. So a bounce would be like maybe 50% of the distance between here and here, maximum. I wouldn't actually look for it, although it's possible to put in a new swing high, because I think it looks really toppy. And I think ultimately, even if you get a bounce here, it wouldn't be unusual to pull down to this level or to pull down to that level. So I guess what I'm saying is I'm a cautious long at this point. And I think we're going to kind of potentially, based on a lot of the different charts I'm seeing, we're potentially going into reversion to the mean mode, where we're pulling back against the major trend. So at some point it will find some support and move higher, unless we wake up Monday morning and the market's just off to the races for whatever reason. I know there's some European news out where they put something like $1 trillion emergency fund or backstop into the economy. I don't remember exactly how they referred to it, but it looks like they're kind of throwing more money at their financial problems. It looks like they particularly don't want Spain or Italy to run into problems, so they're making sure that whatever debt is there or whatever potential countries might go under, for lack of a better word, that they're backstopping that. So that, any kind of news like that can prop the market up. But, I think if we pull back, you've got some levels that are worth looking at. And if we just shoot off and run away in these markets, then, that happens too. There's not much you can do about it. You just you just got to kind of go with it, or just sit back and wait for the next pullback, or just, depending on your trading style, you just have to deal with it. Okay, now let's have a look at some currencies. I'm going to start off with the euro today. The euro we mentioned last week. It looks interesting because it looks like we might have a potential higher low here. Okay, we've put in this lower low and we put in this lower high, right? On the weekly chart, so you've got this lower high, lower low, and I think we might have put in here a higher low, sorry. I don't know, you say these words so many times and it messes with your brain. So here we have a higher low put in place potentially. So what I'm actually looking at, I'm looking to see if this 130 level is going to hold. If this 130 level is going to hold, we closed above this bar here, which is bullish. Now we closed 1 week above the 21 exponential moving average. So what I'm looking at is, I'm looking at a potential reversal in the euro. Now this is all very early stage, and I mean this is a weekly chart, so this could take weeks to play out, or this could roll over and fail. Okay, but what I'm actually looking at here is I'm looking at this from a pattern perspective, and I'm saying, okay, is this going to continue up like this, or is this going to roll down like this? So from that perspective, I think what you would want to look at is these key levels. Okay, and I think, and basically what I'm saying is this area here is not really actionable, okay, in between these levels. So what you'd really want to see, or what I'm really watching, at least in my opinion, is, let me just draw a line here, horizontal line, and I'm looking at like resistance around 134.99, 135 level. I'm looking at support around 130. So what I'd really like to see in the currency futures of the euro is some type of a move out of this Darvas box area. So you've got 130 to the downside still. You've got roughly 135 to the upside. If we punch above this trend line and punch above this Darvas box, then I think the next pullback might be an interesting pullback. So if you look at the daily chart, you've got that price resistance in there. You can see from the daily chart this swing low, it came down. It didn't actually break. It didn't break this low, and now it's starting to push off and it's starting to find a little bit of support. The 21 exponential moving average is, starting to slope higher. You're above it. You're above on a closing basis. You're above it for 4 days. 5 days really, but this one here touched the 21. But you've got, let's say 1, 2, 3, 4, 5 days above it. And you want to break above this level here and, start trucking higher and start having everything moving higher there. So I think we found support in and around there, but, these are really the actionable levels, above 135, below 130. Now that is a 500 tick range, which is pretty big, but, if you want to play in and around this area here, then do so at your own risk, and do so maybe with, when you have decent intraday trends on, the 5 minute to, let's say, the 60 minute. But otherwise, I think you're just in this choppy mess. So it's starting to build some constructive action to the high side, but it's, it could fail, and it's all really early stage. So just, watch these levels. That's really, really interesting, in my opinion. Okay, let's have a look at the US dollar. Now, the US dollar, the inverse of the euro here, is a little bit, I wanted to look at the euro first, because I think that at least from my perspective, it's a little bit of a cleaner chart pattern. When I look at the chart pattern of the US dollar, what I'm seeing here is support here, potential pullback to this trend line, which is still decent support where these two levels come together. We didn't put in, you had this bar here that closed more than 50% off of its highs, okay, which kind of signals a potential pullback. It's at support now, but this is starting to flatten out, So we're either going into a range-bound market or we're ready to roll over. I'm not sure. Based on the euro, it's a little bit, clearer to me, but the US dollar, like, you've got this swing low, swing high, and it's come down here and it actually hasn't put in a higher high. So you've got, now you've got potentially a lower high, okay? And you're looking at this here and you're saying, well, if it's not going to get above this, then it's probably going to roll lower, but is it going to find support here? So I think the euro's a little bit cleaner in terms of its chart pattern, and I think if you look at, like, it's still fairly bullish here on the US dollar, but now we're heading into a squeeze. This is rolling lower. Okay, this is kind of rolling lower, but it's still bullish. So I think you really need to look at it from the Darvis perspective and say, are we going to get a break of that level or a break of that level? This area here is kind of no man's land. Okay, and it's a pretty big area, and the same goes for the daily chart. So I hope that makes sense. Everything on the daily chart is starting to look a little bit more bearish in terms of, this is the 8's rolled below the 21. We're closing below, even below the 8, although you've got a little bit of accumulation in this day here. But, this is becoming bearish. This is rolling bearish and rolling below its zero line, and this is rolled over. Okay, so I think you've got some mixed signals there, but you really need to see some kind of a break of those key levels in order to be actionable. Okay, let's have a quick look at the British pound. I'm not that interested in a lot of the currencies right now. I'm just looking at the British pound just to comment. I'm not really interested in trading it. But what I do see is we've talked about it in the last few weeks, where we had this trend line and we had a break of the trend line, and then I think I said it wouldn't be unusual for it to come down and test this. Now this is going back a couple of weeks in the videos, but it looked like it was the British pound was putting in a reversal on the weekly chart. On the daily chart, it's been really sloppy. But you can see here it's starting to kind of pick up some steam on the weekly chart. The 21 exponential moving average is starting to kind of roll higher or cup higher, and if you look at it here, it's starting to build in some constructive bullishness, where you've kind of held here and you're pushing up, but you really need to break above this level. Okay, you really need to break above that level to really probably get something going to the upside, and I think that level comes in just above 160. So 160 is a pretty key level, I think, in the British pound. It looks like it's trying to get there. You can see it touched the level here on this week, pulled back right here, and then it pulled back here, and now it's right up at that level again. So if we get a break above that level, you want to look for some strength above these swing highs, back in this area here where the price congestion is on these weeks back. Like, these are all weekly bars, so that's going back quite a number of weeks. And then I think you'd want to see some better trending action, and I think you would want to see on the daily chart some kind of move out of this sloppy area. You'd want to see some good trending take place on the daily chart, and the safest trade would probably be, get this going higher and then wait for the next pullback. So that's probably what would make the most sense. It would be the safest kind of trade to look for. Wait for a good trend to kind of develop. You can see here we're just probing above this resistance here. This is bullish, 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 bullish. This is starting to roll on the weekly to the high side. This is bullish, but it's below the zero line here. This is bullish, and this is bullish. So, if this fires off long, let's say, then I think you're going to get some fairly significant movement, as long as, it's really hard to say how strong these resistance levels are. Like, if you remember a couple weeks ago, I was trading the Australian dollar long, and even though we were in the profit for at least a week. It just couldn't get through that resistance. So you never know how strong the resistance is in the background. The cleanest trades are when you're trending higher and you've got no baggage in the background in the form of price resistance. Those are the nicest, cleanest trades. And that's why you see like stocks that are hitting all-time highs like Apple, you just see them going higher and higher and higher because they have no price resistance in the background. Those are the best trades, in my opinion. Okay, so just a quick look at the Canadian dollar. I don't really want to analyze it too much, but just like a case in point here, this looks an awful lot like the Australian dollar did on the weekly chart, where even though you had a long signal fire here and everything looks good to the long side from the weekly Darwin Squeeze perspective, here you're crossing above the signal line. You've got like that higher low in place to give it that energy. You've got some price resistance in the background here that it just can't seem to break through. So if you were to take like an option trade on this using the FXC or something like that, which is similar to what I did on the Australian dollar the other week, you're just going to erode the premium here because you can't, it has to work out fairly quickly and you just can't seem to get above that resistance around 101. So, and look at the daily chart, like what do you do with that? So you always have to be cautious when you take these signals that look like they're going to go break out momentum and everything looks good to the long side, but it can still even pull back here and hold these lows, stay above these lows and remain bullish. But if it doesn't really get going for you, you're going to end up either scratching the trade or even potentially losing money because if you're trading options, your premium's just going to erode. So just be careful with these kinds of reversal patterns or with these kinds of trades that have a lot of price resistance in the background. They can be a real bugger. So we were talking about the Japanese yen last week, so I'll just cover it quickly. The Japanese yen here is a screaming short, but I said be careful because at some point it's going to snap back up to the high side. Now it didn't really snap hard, but you can see that we found support in here, which is what we were expecting, and then we pulled back up here, right? And now it's kind of cautionary because you've got a lot of distance between, a lot of air in between these exponential moving averages on the weekly chart. And you can see that you found support in here. You came up to the 21. Initially, that would have been a good area to get short. And you can see that it did pull back from there, but now we're right back up into that level. So at this point, I would say be cautious, and unless you get like a breakdown to the low side, maybe look for it to pull up a little bit higher, into these levels here, 122.95, 125.81, and that would coincide with probably like a 50% retracement of this weekly move. So just be careful if you're on the short side of the yen. You do have a potential to, to push higher into some of these levels here. Okay. Take a quick look at gold. Not really quite sure what to do with gold here, but we had this initial long signal here. We pulled back. We got stopped out of our position originally, but you can see that we've kind of held support in here, right? We were looking at this as our line in the sand, but we're still below that, and we're doji on the week. When we were long, we were looking at this level to hold. We broke below it, and now we're just kind of doji on the week. You've got some conflicting signals here. This is short side. This is above the zero line, but it's rolling back down. It's kind of short side. This is long side. This is long side. So, but if you look at, so that's the weekly chart. Now, if you look at the daily chart, you can see some kind of, you haven't put in you've got a lower high here, lower low. You haven't put in, this is a potential lower high as well. So the expectation would really be to roll to the low side. That said, you've got this sort of, if this level holds and pushes through, you really don't want to be short above 1700 in my opinion, or above this level, 1720. So it's kind of a tricky place to be, but you do have a quiet period coming in. You've got a squeeze forming here, And if you're going to get continuation on the short side, you'd want to see this roll over, you'd want to see this roll, over red. It still is red, so it is short bias. So you've got some kind of conflict in between the daily and the weekly charts here. But you'd really want to see a continuation lower here, let's say if this comes in red. This is kind of a tricky spot to be in gold. I personally wouldn't trade this. But if I was, I would look for a new Darwin Squeeze on the daily chart to set up to give me direction, either a break above this level or a break below that level. That's really what I'd be looking at, and I'd kind of consider all of this as no man's land, or at least a break below that level. So I'm not sure why the Darwin box came in so low. This bar must have printed this low bar here. Okay. So I would be looking at this as a no action zone from a swing trading basis. Look for a break above or below, that Darwin box really, and then look for the next pullback or the next retracement to look for a continuation. We'll take a quick look at silver too. Silver's a little bit tricky. I think it's kind of in the same situation as gold. It's just stair stepping, but then you can see here. This is where it kind of gets interesting. It probed above this high of this Darwin box in there, and then if this potentially puts in a swing low, and this pushes to the high side, that we could be finding some resumption coming into play here, because if you look at the weekly chart, it's choppy, but it's not. You've got a potential double top here on the weekly chart, and you could get a move down to this level, but you could also, if you find support in and around here, let's say this becomes a higher low, right? If this becomes a higher low, then you could get it pushing back off. So I personally don't know what to do with this. I would kind of give it some time to play out. You're in the same situation where you're in a squeeze. So I would be looking for, for confirmation, I'd be looking for a break of that level or a break of that level to either look at the long side or look at the short side. So I think this is a no action zone. This could even just go sideways, right? So I would keep an eye on this, but I wouldn't do anything with this at this point in time. So taking a look at crude oil now, the CL contract on the NYMEX exchange, you've got you've got conflicting signals here. So what do I mean by that? Well, on the daily chart, you've got a Darwin Squeeze short, which looks pretty good. I mean, if we analyze this, we've got a short signal here, right? Short at 104 with a target of 99.87. So these are pretty good levels here. You've got, this is favoring the short side. Here we've got movement coming in. This is favoring the short side. Here you're still against the major trend, but you see it's close to its zero line. It could roll over, okay? But technically you're against this trend. Now, if you look at the weekly chart, you can see that even though you've got a short signal on the daily chart, you've got support coming in here on the weekly chart in the form of 21 exponential moving average. And you can see it kind of bounced up a little bit from that. So you've got support in here at, what is this, 101.97, so around 102, okay? So around 102 you've got support. So it's kind of like you've got a fairly valid signal on the daily chart, but do you want to take a short into weekly support? That's really a tough call to make. I probably would not, because you've got a room to grow issue. You've got a I don't really like shorting into weekly support because that's usually pretty strong. Now that said, it could break. You could break support here, but you've pushed right into it, and that looks like fairly strong support. So from that perspective, I'm not sure that I'd really want to trade this short signal, but you could be looking at a potential move down to about $100 a barrel and then look to find support in and around that area where it does one of these and maybe comes back up, or it does one of these and it's ready to roll over. It's hard to say. It's really early stage, and you've got, if you look at this squeeze fired, but technically the momentum was lower, but this is still bullish. this is bullish, this is bullish. So you've got mixed signals between the two time frames, which might mean just, kind of leave it alone for the time being until you get more trending action or you get a clearer signal. But you've got a valid signal here, almost a valid signal, and then you've got support. So I wouldn't really want to short into weekly support. And just a side note there, this is why it's really important not to look at setups in a bubble. And what I mean by that is it's important to look at multiple time frames. I've been talking to some of our members from our meetup groups, and we've had a few members join our trading floor. And some of the discussions that we've been having are, multi-time frame analysis. I see a lot of professional traders use it, and for good reason. It's really important because you really need to know where your support and resistance levels are in multiple time frames, because the bigger time frames are really they really provide stronger macro direction and stronger support resistance levels, and you don't want to take a trade that might fail because you're not really cognizant or aware of the bigger time frames and the bigger levels. So that if you're not aware of what multi-time frame analysis is, I suggest you kind of study it and look at it in the context of what you're doing. Like if you're going to swing trade, it might make sense to look at a weekly chart, a daily chart, a 60-minute chart, where you use this for entries, the 60-minute chart for entries, and you use the daily chart and the weekly chart to see where your bigger trends and your bigger support resistance levels are. Okay, and last but not least, let's have a look at the grains market. Now, I had a nice guy over here on Friday. His name is Chris. He is a longtime trader. He traded with some of the bigger banks and over the years. And he was here, and we were watching John Carter from Trade the Markets trade the grains into the close. And one of the interesting things was he was making really good money. I'm talking, in the thousands of dollars. John was booking, like over. I think he booked on one of them about 5,000 and several thousand on the other ones. And it was interesting because he was trading corn, and you can see corn closed here. Corn closed here. I'm not sure if it actually closed limit up, but look at how much it was up on the day. And you can see here he was long, and what he was looking to do was he was looking to, you see he was long here. Now when you're in a limit move in the grains, and let's say corn goes limit up, then what he was looking to do was he was looking to see if soybeans and wheat would also go limit up. And if it closed limit up, then usually what happens is people get stuck on the short side and they can't get out, and the longs are not willing to sell to them. So what ends up happening is, let's say if you hold it into the limit up move, which I don't recommend personally, it can be really dangerous, and you definitely don't want to get caught on the wrong side of a limit move, because you could lose a lot of money. You could even lose your livelihood. You could end up owing your broker a lot of money. But what he was trying to do, what John was specifically trying to do, is say, okay, if we close limit up here, I want to hold into that Sunday night when the market opens. Again, when the grains market opens, it could pop up somewhere, and go limit up again, because people are stuck on the short side and they can't get out of their positions. So that's what he was looking for, and it's really it was an interesting trade. I've seen this happen before, and it's really if you're going to trade a market, you really need to understand the risks. Like for example, people that, let's say, looked at this as a short signal in corn and it was going lower and lower. Let's say they were holding their position here and they were in the profit and they were still in their position. All of a sudden here they're underwater. If they, let's say, got in here and they're making really good money here, all of a sudden now they're underwater and they can't get out of their position. And if this jumps up to this level here, let's say, or even this level or anywhere above here, they're going to be in a lot of pain and they're going to have to cover their position. And that's why you get these really exaggerated moves, because people are stuck on the wrong side. The buyers aren't willing to really sell, because they're expecting, a pop up. So you really need to be aware of the risks in the markets that you trade. Okay, and the risk really in the futures market is, like, if you were short here and you had a stop in here, let's say above here, and the futures markets trade generally like basically 24 hours, 5 days a week, 24 hours a day, 5 days a week. But where the risk really is when the market will potentially gap when it, let's say, closes on Friday, and then it opens up again on Sunday. Right? Things can get repriced in between those periods. And like stocks can gap up or down any morning where they, let's say, close at 4 Eastern time, right? So stocks will close at 4 Eastern time and they'll open up at 9:30 a.m. Eastern. So that's where you get, price gaps. In the futures market, you get price gaps between when the market actually closes for the week and reopens for the next week. And that's really where your risk lies. So even if you want to swing trade some of the futures markets, you should probably, really consider, should I hold over the weekend? And that's really where the risk in futures lies. You do get lower periods of liquidity overnight in some markets, but where the major risk is when the market closes and then reopens and you get a repricing of things and you're caught on the wrong side of that. So I personally don't do it. I don't like the risk. But the point I'm really trying to make is you have to be aware of the risk in the markets that you trade. So just having a look at these markets here, you can see, in the corn market on the weekly chart, we talked about, going higher in corn and it looked constructive. Soybeans have been leading the charge. But then you had this, this flush out here. And then you can see that obvious accumulation here, which coincides with this limit move on the daily chart. So that, to me, is some pretty crazy action. I mean, I really don't know what to do with it at this point in time. If you didn't have a trade on, somewhere in there, if you even wanted to take that risk, I really don't know what to do with that. But I just wanted to point out, some of these risks in some of these markets that people may not even be aware of. Now, if we look at the soybean market, I mean, we've been talking about the soybean market for a number of weeks now. I haven't participated in the move because I don't like swing trading the grains, and I actually don't even really trade the grains much anymore. I used to day trade them a little bit, but I've been focusing more on the indexes lately, and I may come back to day trading them again at some point, but from a small contract basis. Now, we were talking about this going back a number of weeks where we put in this higher low, and then we broke above this Darwin box here. And you can see here the 8 crossed above the 21. And we've had some really nice trending action. Now, where we've had some really nice trending action is on the daily chart. You can see, look at the strength of this trend here. And we were talking about, okay, if you weren't, let's say you wanted to swing trade this and you weren't already long, you could wait for this pullback in and around here, close to the 21 exponential moving average, and expect a resumption of the trend. And that's basically what you had. And then you can see, look at this explosive move that coincided with, that potential limit move. Now, I'm not sure if the soybeans actually, it looks like they came off the limit up. And I'm not sure if the corn really closed limit up, but this was, you would expect a continuation in this trend because of the chart pattern in the soybeans. You've got the strong daily chart. You're going to find support here, at the 21 exponential moving average, and that's exactly what happened, okay, when you have a nice trend in place like that. So at this point in time, I'm probably expecting, I would expect if we're caught in a limit move here for, a push up even higher, where people are caught on the wrong side of the market. But from my perspective right now, I don't really have an opinion. It's kind of inactionable now. The move really happened here, in my opinion, where you got this nice pullback and then you pushed higher. Okay, and at this point, if I was in this move, I would have taken profits here and just called it a day. Okay, and I just want to round this up and wrap it up with the taking a look at the wheat. The wheat is in the same situation here. We said it looked like it was building some constructive action to the higher side, but it was still really early stage. It's still really early stage in here, and you want to see a break above that level on the weekly chart. This is really sloppy on the daily chart, but then you can see, when the corn and the soybeans, the corn started to go limit up, you can see that the wheat was up like 7.5%. That's huge. Corn was up 6.62%. and soybeans closed up almost 3.5%. So this was a pretty big move. It doesn't look like it actually closed limit up, but you know, you don't want to be caught on the wrong side of that. But this is basically the chart pattern on the daily is really sloppy, but this is basically the same situation as you know, the corn and the soybeans. Soybeans having the best trend, and the corn and wheat just, you know, doing this crazy limit up move. So hope that helps. Any questions, you know, feel free to send me an email, give me a call. We're going to be looking at scheduling some future meetups soon, and we're going to be looking at maybe offering some more introduction to technical analysis, you know, 101, chart reading 101 as well for, you know, some of our members, the various different members that that we have. We've had a couple of people join our live trading room, so we're getting going on that project. It looks really interesting, and you know, we'll keep you updated, and we'll see you, I guess, next week again. Have a great weekend.